Before we get this video started, don't forget to give me a thumbs up for these little puppies. Say hi, guys. Give me a thumbs up. Say, give me a thumbs up. What's going on, guys? It's Investing Hustler here, and today I'm going to be talking about NIO stock. I'm going to show you guys why I purchased NIO stock. I'm going to show you guys the prices that I've been buying NIO, give you my perspective and my mindset as to why I'm purchasing NIO stocks and at what price I plan to purchase even more if NIO continues to drop. I'll also be letting you guys know why NIO has been crashing. I have a few interesting articles on NIO as to why NIO has had a huge decline. We'll do some chart and technical analysis started, but before we get this video started, I want to ask you guys to give me a thumbs up, and if you're new to this channel, don't forget to hit that bell button and to smash that subscribe button. So let's get it started. So first of all, NIO stock has dropped over 50% in this month alone. We've dropped over 50.69%. NIO has seen a sharp decline, and the main reason is because of their horrible earnings. We're going to get into their financials in a bit. Let's just look at NIO charts. I'm going to analyze these charts. So I made my original video on NIO saying when I was planning on buying NIO. I made this video pretty much when NIO had those bad earnings. NIO dropped all the way down to $8, and I mentioned a video where I would be considering purchasing NIO once it went below this support line, which was at $6. And before you know it, NIO went way below $6, and I started my first position in NIO at around $5.80. At that time, I talked about how I started a very small position with NIO, and I'm going to show you guys right now my very original position, just so you guys know I'm not just making stuff up. Right here, $5.80, I bought 184 shares, cost me around $1,077.19. Right here, you could see I bought some NIO. So then I did talk about how I was starting a very small position, maybe expecting NIO to continue to decline. And just in case if it did decline, I would be ready to purchase more. And I had a second line here, which is this other support line, which was close to its previous lows when it IPO'd, which was below $5.30. And I mentioned that if NIO drops below this second line, I'll be ready to purchase more shares. So before you know it, NIO went down even more, and I'll show you guys the more shares that I purchased with NIO. I ended up buying on March 26th 188 shares of NIO at $5.02. So I'm going to bring up the 5-minute charts real quick, and I'll show you guys exactly where I purchased. So I pretty much purchased right around here, the $5.02 range. We did see NIO go as low as $4.90, which would have been a perfect buying opportunity. Oh no, it said March 26th. So I think I purchased around here. It went as low as $4.90, and then we've seen it bounce back up. I made my purchase at around $5.02 a share, as you guys can see here. Now, NIO has been using this $5 line as a support line. I drew the support line at around $4.96. But it's pretty much been using $5 as a support, and it's also been trading sideways. What I would love to see with NIO is finally them go above this previous support, which is now most likely going to act as a resistance, the $5.30 line, and all the way back up to the $6 range. It has acted as support before, will most likely be acting as a resistance now. I will probably collect some profits at the $6 mark, mostly because I have a feeling it will bounce up to the $6 and continue to trade possibly in between these lines for the near future. I most likely will sell once it reaches the 6, maybe just half my shares. I know I have a very small position. It's going to be very small profit, but I'm selling with the expectations that it's going to bounce back down and I can continue averaging down. Right now, I'm holding 188 shares plus 184 shares, which equals to a total of 372 shares at an average price of $5.40. So I would love to bring my average price down closer to the $5 range so I can continue collecting profits and then purchasing at a lower price. It's not always guaranteed. If I collect profits once it reaches $6 and it continues to shoot up, then I'll just hold on to the remainder of my position. I'm totally fine with holding on to a very small position with NIO. And the reason why is because this is a high speculation stock. There's a lot of risks involved in investing in this stock, and I'm going to talk about them very soon. And if NIO continues to drop, which we can look at these charts right here, and we can see that NIO is currently downtrending. We've been downtrending on this support line. So if NIO continues to drop, I will most likely end up picking up some more shares at around $4 if NIO goes below $4. Obviously, I hope NIO doesn't continue to downtrend. It does seem like we're using this line as a support now, But at this point, anything's possible. But if NIO continues to downtrend, I will be picking up more NIO shares at $4. And I think at this point, I'll be doubling up my position. So instead of picking up $1,000 worth of shares, I might pick up 2,000. So I will increase my risk a little more, and then my final purchase will be at $3. And at that point, if it goes below that, my next concerns will be that NIO could possibly be going bankrupt. I might as well be prepared to lose all my money, which is why I started such small positions. It's money that I'm willing to risk, and it's a possibility that I could lose that money. So right now, NIO's sitting at $5.10. With the recent drop, they do have a market cap of $5.2 billion, total assets of $2.8 billion. We're going to look more into their financials right now. So their operating income or loss was negative $3,446,000. Their operating income or loss has pretty much been getting worse every quarter. On 2018, March 31st, they had a 1.4 billion operating income loss. Then we had 1.8 billion, negative 1.8 billion operating income loss, then negative 2.8 billion, and now we're at negative 3.4 billion. So these numbers just keep getting worse and worse and worse. But on the bright side, the net income from continuing operations went from negative 9.7 billion to now negative 3.5 billion. And if we look at their balance sheet, they have total assets of 18 billion, but they have total liabilities of 10.7 billion. So on paper, NIO isn't looking that great, which is why I'm saying that there's a lot of risks involved. I also found this very interesting article, but I will mention that this article was written by a short seller, which you can see right here, Disclosure Short NIO. And it's a very bad article about NIO. I did highlight some important parts, like NIO is a cash incinerating machine par excellence. Since founding barely 4 years ago, they have run up to 5 billion in accumulated deficits, are currently burning around 500 million per quarter, and have no clear path of profitability in the near term. The scale of the cash burn is such that they had to rush out a convert offering to raise 700 million just 3 months after the IPO raised 1 billion, relying on the artificially inflated stock price during the pre-lockup period. This prompted numerous lawsuits. The bonds have since cratered with the stock, but the upshot is now, no matter what, they need to come back to market for another 1 billion in 6 months or sooner. Such is the scale of their cash burn. I judge they've already burnt most of the convert cash they've raised. So that doesn't sound very good for NIO. They're a business that keeps burning cash. Here's another one. Consider the following. NIO has burnt 5 billion in 4+ years of operating, which is 1 billion a year on average. They burnt 1 billion, my estimates, in the first 2 quarters as a public company, just after raising 1 billion in the IPO. Cash burning is increasing because of the aforementioned big increase in hiring and cash nature of those expenses. The accelerated burn rate forced them to raise another 700 million in convert debt before the IPO lockup expired, with no new disclosure, as it was an overnight deal that was promptly followed by a guidance cut. Q1, Q2 delivery guidance implies at least 500 million a quarter in further cash burn and gross cash today, allowing the convert, but before IQ cash burn is maybe 1.5 billion. So in other words, assuming nothing changes by June 30th, we are already halfway there. Gross cash should be below 1 billion, assuming no deterioration in working capital. This guy pretty much just summed up everything negative about this company. He even speculated on some other things. So if you guys want to check out this article, you guys could type this in on Google, NIO, this will end in tears. But let's keep in mind, this is someone who is shorting the stock. Also, if we look at the auto industries, they have been slowing down this year. So as of March 28th, the S&P 500 and the index has risen 1.1% so far. Meanwhile, General Motors was trading with a 6.1% loss, while Ford Motors Company, F, and Fiat Chrysler were nearly unchanged from their previous months. U.S. electric car maker Tesla and Chinese peer NIO has fallen 12.9% and 47.6% to date in month, respectively, as of March 28th. Japanese automakers XLY, Toyota Motors TM, and Honda Motors HMC had seen 1.6% and 3.4% falls respectively in the same period. So investors are losing confidence in the auto industry. So another thing to watch closely with NIO is With speculative investments, you need to check the news every day. Citron, whose bullish thesis led many into the stock in the fall, sold for 50% gains in February. By March 11th, investor place contributor Luke Longo saw the bull thesis weakening, and that was an understatement. So the catalyst for the fall was NIO's March 5th earnings release, showing a loss of $511 million on sales of $435 million and the vehicle margin of just 3.7%. The company still had $1.2 billion in cash at the end of 2018, but at the rate it was going, that could be gone by June. Worse, January sales actually fell to 1,803 vehicles from 3,318 in December. The company acknowledged it accelerated sales in December ahead of cut in electric car subsidies in China this year. It also blamed a general slowdown in the Chinese economy. And one more thing, Tesla is now in China, and in a big way, Model 3s are available there, and a factory will be producing them in Shanghai by the end of the year, eliminating NIO's domestic price advantage. So there is one positive thing about NIO. NIO does make a nice car. About the only bullish thing that can be said about NIO is that it makes a very nice car, sold in a very nice way. The company aims to build a community around its buyers with a mobile charging stations dispatched to their homes, an app to connect them, and a physical NIO house for them to. So I've outlined pretty much all the concerns I've had with NIO, and also I have two other videos with NIO where I get into detail with these companies. You guys are welcome to check them out. Another main reason that NIO has dropped was the company scrapped plans for a factory in Shanghai after posting a heavy loss in Q4. So this news actually led to a lawsuit, which I did talk about on my previous video. So if you guys want to check that out, you guys could check that out. Obviously, this is a very high risk stock, and I just showed you guys all the negative news on this company, and a lot of people are running from it. And we've all heard this quote before: be fearful when those are greedy, and be greedy when those are fearful. So right now, there's a lot of people running away from this stock. And I think at this point, a lot of people are scared of this stock. And this is my time where I might start increasing my position the more this company goes down. I think the electric vehicle industry, the EV industry, is going to be something big in the future, which is why I'm willing to take a small risk for this company. So there's a lot of risk involved. This is why I'm telling you all the negative stuff. I'm not here to short sell NIO. I fully showed you guys I'm buying NIO as it goes down, but I'm also letting you guys know all the risk involved with this company. And I'm not telling you guys to blindly jump into this company simply because someone else is doing it. So always make sure you do your due diligence, make sure you do your homework, and invest in a company that you believe in. But anyways, that's it for now, guys. If you guys enjoyed this video, don't forget to leave me a thumbs up. And if you're not subscribed, hit that notification bell and smash that subscribe button. I'll see you guys next time. Bye-bye.